Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, September 24th, 2007. The market's closed, and the S&P 500 finished with a loss of 30 cents, or about 0.2%, as a low-volume pullback continues to materialize in here after last week's big breakout past the 150 level. You can see that it's been a very nice, neat, orderly pullback so far. Doesn't look like anyone's in a big hurry to bail out of their positions and turn this market bearish. But in the short term, it is in a slight downtrend here. Still finding a little bit of resistance up near about this 152.80 level, 152.85. And you can see that the pullback so far has materialized to about 50% of the lows right before the Fed to the high the next day. That is last Wednesday. So we've retraced 50% of that move so far, still within a healthy parameter of a pullback, and we've got a rising 5-day moving average, although the market is below that. It's the direction of the moving average that's more important, and right now I think short term you got to be just kind of neutral in here, but it's looking like again a nice orderly pullback in here. So we've got one little reason for concern is the market did fail towards the end of the day to hold on to the 5-day VWAP, and I'm going to a 5-day VWAP now because that encompasses the action since the Federal Reserve meeting, meaning that since that day when we had all this big volume and this huge breakout, what we've seen is that the average price the market's traded at, including that morning, was about 152.15. If we take it just from the Fed meeting and do a horizontal line across VWAP, you can see that's actually a little bit higher. So there's a little bit of reason for concern there. And still, you don't want to get aggressive on this market until it can start to reverse this little series of lower highs and lower lows. So we want to see maybe a higher low, rather, right up to about 152 and a quarter. Maybe you can rally up to this level of resistance once again, then pull back, make a higher low, and then break out. That would really kind of be the ideal situation I would look for. But the market doesn't listen to me, so we have to just listen to the message of the market and continue to monitor it for the next potential move higher is what it's looking like it's set up for. The semiconductors failed to hold on to the level that I was hoping would act as support. That was about that 38.40, 38.50 level. It came down towards that level on Friday. It looked like it was going to bounce from that early on this morning. Instead, it did bounce and then failed. Then the market came down right to that rising 5-day moving average. This market, the semiconductors that is, let's take a look at the Fibonacci from there. You can see it's only retraced a third of the gains since last Tuesday. It's interesting to see that it did find support too at the conjunction of this rising 5-day moving average and the 38.2% retracement. A lot of times when you have a couple of different technical reasons for a market to potentially find support, it strengthens that area because more people are coming to the same conclusion, but that is to either stop selling at that level or start bidding, but for different technical reasons. In this case, that being the 38.2% retracement level of this move, as well as the location of the rising 5-day moving average. Not sure if I said that exactly the way I wanted it to come out, but hopefully you understood that. The IWM, Russell 2000, you can see is coming down and testing this important level near the 80 level. To that, we've got that 200-day moving average. We've still got a declining 50-day moving average, which tells us that maybe we're in for more of a time consolidation in the IWM. But breaking back below, let's say about 79.90 or so, I think is going to be reason for bigger concern, especially if it holds below there for more than, let's say, a half hour or so. Let's take a look at the Fibonacci levels, actually, because a 50% retracement would bring it down to 79.90, and a 61.8% retracement, 79.36. So keep an eye on those levels. Those two areas are potentially important levels on the downside if it does pull back, but there's nothing here suggesting it will do that. This level, it does look like it's holding a support, this prior resistance, but a failure here could make it fail pretty hard. So the shorter term, again, here on the 5-day, it is below the VWAP of the last 5 days. The average transaction over the last 5 days has been at $80.71, meaning that the average purchase is underwater by about 30 cents. It's not a lot. It's not much to worry about if you're a buyer, but it is potentially signaling that the market sentiment is changing here. And we do have these lower highs and lower lows right here. So let's wait for bullish. I wouldn't want to really get bullish on the IWM until it can at least take out this level here at about 81.35 or so, and that might be where this market decides to recover from. The Qs, the NASDAQ 100, has been the strongest group and continued to today with its 22-cent gain, or about 0.44%. So another new high here, new closing high for the year in the NASDAQ 100, and obviously multiple year highs as well. So the Qs continue to act the best. We did see some weakness here late in the day. It didn't hold on to all that strength, but again, I'm going to change this scaling so we can see this a little bit more clearly. Let's take a look at the Fibonacci levels in here just for potential support levels if this market does continue to pull back or does start to pull back. That 38.2% retracement, $50.20, is going to be meeting this 5-day moving average tomorrow. So if we get an early sell-off, maybe that's an area where it finds a bounce from, although that would be just for aggressive traders in here. This later in the day sell-off with its inability to recover is a slight reason for concern. We can also draw on a trend line off of this level. We see that's where that failed. And then maybe another trend line right here that again meets that 38.2% level and the 5-day moving average. So still kind of seeing mixed signals overall in the market, but the NASDAQ is in an uptrend at all-time high, not all-time highs, but multiple year highs here. And the SPY, the spiders, seem to be consolidating on a low volume pullback, but the buyers haven't regained control yet. So still just a mixed picture right now.